This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, August 3, 2026, and this is the New York session. Now, let's get into it. Bitcoin is holding at $63,542, clinging to a support level that looks less like a foundation and more like a tightrope walk over a liquidity void. The Fear and Greed Index is pinned at 14 out of 100, marking an absolute nadir of market sentiment, yet the price hasn't capitulated. Instead, we're watching a structural fracture. Institutional leverage has evaporated, with Bitcoin futures demand collapsing to 2024 lows, while spot prices remain eerily static. Today, we dissect whether this is a coiled spring ready to snap, or the quiet before a much deeper decline. Before we look at the charts, let's check the calendar. We have 3 key economic releases coming up on Tuesday, August 4th: durable goods orders, JOLTS job openings, and the trade balance. These will set the tone for global risk appetite heading into Wednesday's ADP employment change. But right now, the crypto market isn't waiting for Washington. It's reacting to a void left by institutions. Here is the snapshot as of 1904 ET on August 3, 2026. The global crypto market cap has contracted by 0.7% to roughly $2.26 trillion. Bitcoin dominates at 56.39%, while Ethereum lags at 9.92% dominance. The VIX sits at 15.99, suggesting volatility is currently suppressed. But suppressed doesn't mean safe. Let's look at the news driving this environment. First, a headline from Cointelegraph reports that Iranian crypto outflows spike 700% after U.S.-Israeli airstrikes. Second, CoinDesk notes that U.S. Senate housing bill includes CBDC ban, signaling a legislative shift against digital currency controls. And third, Cointelegraph highlights that Bitfinex revives tokenized bonds targeting crypto-native yield seekers. How do these flows impact the current fear dynamic? The 700% spike in Iranian outflows is the primary driver of the current extreme fear reading of 14/100. This isn't market-driven selling, it's geopolitical distress selling. When capital flees conflict zones into stable coins and liquid assets, it creates artificial volume spikes that mask the underlying rot in retail sentiment. The fear is accelerating because the 7-day trend is rising from 12 to 14. People aren't panicking because prices are crashing. They're panicking because they know the smart money has already left.
I agree on the distortion, pulse, but don't underestimate the scale of the void on the derivatives side. Bitcoin futures demand is at 2024 lows. That 700% outflow from Iran is adding to spot liquidity, perhaps propping up the $63,542 price, but it is not replacing the leveraged long positions that used to drive trends. We are seeing a decoupling. Spot holders are stuck holding the bag, while futures traders have cleared out entirely. This makes the price incredibly fragile.
Let's turn to the technicals. Bitcoin is testing $63,542 with minimal downside pressure, but the lack of futures support is glaring. Grid, is this a valid support level or a bull trap?
It is a passive hold zone, not an active buy zone. Bitcoin is sitting at $63,542, up just 0.2%, but the volume profile tells a different story. We see no conviction. The VIX at 15.99 suggests the broader market is complacent, but in crypto, low volatility without expanding open interest is a warning sign. The $63,542 level is being defended by spot limit orders, not aggressive buying. If that level breaks, there is no liquidity cushion. Meanwhile, look at Uniswap at $3.91, down 6.5%. That's a technical breakdown. Governance tokens are getting crushed, and that sets the tone for the rest of the altcoin basket.
Grid, you're looking at the chart, but I'm looking at the flow. That Uniswap breakdown isn't just a technical failure, it's a liquidity rotation. Capital is fleeing complex decentralized finance structures like Uniswap and Chainlink, which is down 1.6% at $8.19, and moving into simpler, high-volume layer ones. Look at Cardano at $0.19, up 3.4%, and APT at $0.57, up 2.7%. This isn't broad market strength, it's a specific flight to Asian-favorited chains. The smart money isn't entering the market, it's shuffling seats within the casino.
And that brings us to the core risk, the VIX compression. At 15.99, the SIBO volatility index is at its lowest in 5 days, having dipped from a high of 20.88. This suppression of volatility is masking the fragility of the spot-only rally. Core Scientific turned lower after disappointing Q4 results, and that's a leading indicator for infrastructure stress. When the VIX expands again, and it will, the lack of futures support will cause sharp, unbuffered dislocations. We are not seeing a bottom, we are seeing a pause in the descent.
So we have Bitcoin holding steady, but the structural integrity is compromised. Let's dig deeper into the leaders and laggards, starting with Bitcoin itself. It's at $63,542. Why is it holding while everything else bleeds?
Because of dominance. Bitcoin dominance is at 56.39%. In an extreme fear environment, capital flees to safety. Ethereum is struggling at $1,858.48, down 1%, and Solana is flat at $73.47. Investors are de-risking into Bitcoin because it's the only asset with enough liquidity to absorb the panic without slippage. But here's the catch: this dominance is a double-edged sword. It means Bitcoin is strong relative to weakness, not necessarily strong in absolute terms.
Exactly, and that's why the futures data is so concerning. If institutions were accumulating, we'd see rising open interest. We don't. We see 2024 lows. This suggests that the $63,542 price is being held by long-term holders refusing to sell, not by new buyers. Once those long-term holders decide to exit, there is no one left to catch the falling knife.
And remember, the Fear and Greed Index is at 14/100. Most analysts would call this a buying opportunity. But with the 7-day trend rising from 12 to 14, the sentiment is worsening, not improving. The crowd is not ready to buy. They are terrified. Until that trend reverses, every green candle is a distribution event. Let's move to Ethereum. It's at $1,858.48, down 1%. Grid, how does the technical structure look for Ethereum compared to Bitcoin?
Ethereum is showing clear weakness relative to Bitcoin. While Bitcoin is consolidating near $63,542, Ethereum is drifting lower. The minus 1% move might seem small, but in the context of a minus 0.7% total market cap contraction, it indicates that Ethereum is not benefiting from the safe haven trade. The ratio is deteriorating. If Bitcoin holds, Ethereum might stabilize. But if Bitcoin breaks, Ethereum will likely fall faster. There's no support structure visible at these levels that can withstand a renewed wave of selling.
I want to highlight the CBDC ban headline from CoinDesk. U.S. Senate housing bill includes CBDC ban. This is structurally bullish for decentralized assets like Ethereum in the long run, as it pushes preference toward non-state-controlled ledgers. However, in the short term, institutional players are cautious about regulatory uncertainty. They are reducing exposure to complex smart contract platforms like Ethereum while staying in Bitcoin. So, despite the long-term tailwind, the short-term flow is neutral to negative.
Which reinforces my earlier point about timing. The CBDC ban is a noisemaker right now. The market is focused on Core Scientific's miss and the 700% Iranian outflow. Those are immediate liquidity drains. The CBDC ban is a policy shift that won't move the needle until sentiment stabilizes. Don't mistake a regulatory tailwind for a buying signal when the wind is blowing directly in your face.
Now let's look at the outliers. Cardano is up 3.4% at $0.19. Polkadot is up 3.3% at $0.82. APT is up 2.7% at $0.57. Why are these specific assets gaining while the rest of the market shrinks?
These are the Asian favorites. Look at the price action. Cardano is pushing against local resistance while Uniswap is breaking down. This is a classic rotation play. Traders are using the relative strength in Cardano and APT to hedge against the broader market collapse. Technically, Cardano is showing a wedge pattern that is holding, whereas Uniswap is in freefall. The market is rewarding assets with high liquidity on Asian exchanges and punishing those tied to Western regulatory narratives.
It's also about connectivity. BNB is holding at $589.38, up 0.1%, and PayPay, which owns 40% of Binance Japan, is seeking a $1.10 billion Nasdaq IPO according to CoinDesk. This IPO filing brings legitimacy and liquidity to the Binance ecosystem. Cardano, APT, and NEAR are deeply integrated with those exchanges. So, the inflow isn't just speculation. It's structural capital moving into ecosystems aligned with the upcoming PayPay listing and the broader Asian market integration.
But be careful. The Fear and Greed Index is 14/100. Retail traders love a story. The Asian boom narrative is attractive when the West is bleeding. But this is a crowded trade. Everyone knows Cardano is up 3.4%. When the broader market corrects, correlated assets eventually succumb to gravity. This strength is fragile. Let's contrast this with the losers. Uniswap is down 6.5% at $3.91. Chainlink is down 1.6% at $8.19. What's happening with decentralized finance?
Decentralized finance is being punished for complexity. Uniswap at $3.91 is a breakdown level. Once that support fails, it triggers stop losses across the sector. Chainlink at $8.19 is also under pressure. These tokens rely on network effects and developer activity. In a low volatility, low fear environment, these narratives don't hold weight. Investors want simple, liquid assets. They don't want to navigate the risks of governance tokens.
And there's no capital influx to offset the selling. Unlike Cardano, which has exchange-backed momentum, Uniswap and Chainlink are waiting for external catalysts. With Bitcoin futures demand at 2024 lows, there's no new capital entering the decentralized finance space. The existing holders are rotating out to safer bets or stablecoins.
This is the danger zone. When decentralized finance tokens like Uniswap break down in an extreme fear regime, it often precedes a broader market correction. It signals that even the blue-chip altcoins are not safe. If Uniswap drops below $3.91, expect a cascade effect. The lack of futures support means there's no buffer to absorb this selling pressure.
We've covered Bitcoin, Ethereum, and the decentralized finance split. Let's touch on Solana. It's at $73.47, flat with no change. Where does Solana stand technically?
Solana is in consolidation. At $73.47, it's sandwiched between support around $71.99 and resistance at $74.15. It's neither leading nor lagging significantly. This flatness suggests waiting. The market is unsure whether to rotate back into high beta chains like Solana or stick to the safer Bitcoin/Cardano axis until volume picks up. Solana is just mirroring the broader indecision.
From a flow perspective, Solana is interesting. It has high transaction volumes, but open interest isn't expanding. Similar to Bitcoin, the spot market is doing the work. Without leveraged longs, Solana's upside is capped. If Bitcoin dips, Solana will likely follow, perhaps with higher beta.
Finally, let's look at Ripple XRP. It's at $1.07, down 0.1%. Stellar XLM is at $0.17, down 1.4%. Any thoughts on XRP?
XRP is essentially flat. At $1.07, it's hovering near key psychological support. It's not participating in the Cardano rally, which is notable. Usually, XRP moves in sympathy with broader altcoin strength. Its stagnation suggests a lack of buyer interest at this level.
Don't ignore the CBDC ban headline. U.S. Senate housing bill includes CBDC ban. This is potentially huge for XRP and privacy-focused assets. It removes the threat of government-controlled digital currencies, making non-censorable rails like XRP more attractive long-term. But again, the market is in extreme fear. Long-term narratives don't stop short-term selling. XRP is waiting for the fear to subside before it can react.
We're nearing the end of our deep dive. Apex, tie it all together. We have Bitcoin holding at $63,542 with collapsed futures demand. We have Cardano leading gains due to Asian flows. We have Uniswap crashing. What is the single most important takeaway for listeners?
The takeaway is structural divergence. The market is split into two realities. Reality 1 is the spot price, anchored by Bitcoin at $63,542, which appears stable but lacks leverage. Reality 2 is the derivative and sentiment data, which screams distress. Fear at 14/100, futures at 2024 lows, and Uniswap dropping 6.5%. Grid correctly identified the Bitcoin support level, but CIPHER confirmed that without open interest, that support is illusory. Pulse warned that the rising fear trend means we aren't at the bottom, and SPECTER highlighted that VIX compression is hiding risk. The consensus here is that the current price stability is a liquidity illusion. The market is not recovering, it is conserving energy in a hostile environment. The only bright spots are the Asian-favored chains like Cardano and APT, driven by specific exchange flows, not broad market health. Listeners should avoid chasing the pumps in Cardano or APT as a sign of a general market turnaround. This is a niche rotation, not a revival.
Apex, thank you. To summarize, Bitcoin is holding at $63,542, but the collapse in futures demand and the 14/100 fear score suggest the foundation is weak. Cardano and Aptos are showing relative strength due to Asian exchange flows, but decentralized finance giants like Uniswap are breaking down. The VIX is low, but that may be masking impending volatility. Tomorrow, watch durable goods orders and JOLTS job openings on August 4th. These will help determine if the broader macro environment exacerbates this crypto-specific fear. Stay alert, stay liquid, and keep your eyes on the flows, not just the price. This has been ShadowQuant Crypto Edition. Thanks for listening. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.